Hello friends and welcome to the Coin Engineer YouTube channel. Our third video of the technical analysis series is about what is the moving average and how to use it efficiently. But before we start, I would like to say that you can have all the crypto information, pre-sales and latest airdrop videos you need for free from our YouTube channel. So do not forget to subscribe, turn the notifications on and follow our other social media accounts to not miss out on any opportunities. The moving average is one of the many indicators that TradingView does offer for us. Just like the trends and support resistance zones, there are many indicators that we must use to make that good, highly beneficial trade. We can find the moving average in our indicators folder by typing MA on the search box, and we can add it to our favorites by clicking this star button. Moving averages are usually calculated to identify the trend direction of a stock or to determine its support and resistance levels. The moving average is calculated by adding a stock's prices over a certain period and dividing the sum by total number of periods. The most respected periods by the traders worldwide are 20, 50 and 200. You can adjust your indicators in this section by clicking this settings button. You don't need to change anything in here, but you need to add the number of the period you would like to use. Let's start with 20 days and let's click on this style button. We need to make our moving average line more visible for better observation, and we can change our color to yellow since this is the shortest moving average. As you can see, when the price is above the moving average, it uses this line as a support level, and when the price is below the moving average, it uses this line as a resistance level. But never forget, it takes more than a single indicator to make a profitable trade. By saying that, let's put another moving average in here, and this time let's make it 200 and change its color to red. Now it became even more clear that when the moving average is starting to move downwards, and if it at some point cross passes with another moving average like in this area, since the price was already falling, I can say that the price might fall, and I can use other indicators and drawings to find a good spot to enter to a short position. And also I can do the opposite if the price is moving upwards. There are two types of cross passes. Those are golden cross and dead cross. This is golden cross, this is dead cross. When the yellow line cross passes the red from bottom, it is called the golden cross, and it tells us that we can predict an increase in the price, as you can see. And when the yellow one crosses red from the top, like in this area, it is called the dead cross, and it tells us that we can expect a decrease in the price. Moving averages are essential in regard to trading. Our next topic will be about how to identify buy and sell points, and moving averages play a big part in that. And this is it for today. I hope you have enjoyed our content. If yes, please drop a like under the video and share it with your friends. And if you would like to see more of our content, please click on the subscribe button and follow our other social media accounts. Thank you for watching and take care until next time.